All right, everybody. Welcome to some end of the year coverage for all you folks out there. You know, we're off for the final week of the year. A lot going on in this final week of the year. But we didn't want to leave you folks empty-handed on the content side. We, of course, have been taking the pulse of our audience throughout the year on a variety of the most pressing, the most hot-button topics in the world of options and volatility and indeed markets in general. And we thought, what better time than the beginning of 2024 to look back on what you folks thought about the hot button issues of 2023. So without further ado, let's get started. All right, we kicked off the year, as we always do, with our annual sentiment poll. We asked you folks back in January of 2023, January 4th to be precise, so kicking off the new year hot, listeners. If you had to buy a 10% out-of-the-money call expiring on December 31st on one of the following products, which one would you choose? Gave you four categories: your S&P 500, your Bitcoin, so obviously your crypto surrogate, WTI, so going straight energy, or VIX, aka volatility. And the results were surprising, with nearly 45%, about 43.3%, choosing the equity market, which, again, not a bad choice given how things turned out towards the end of the year. Then we had a strange tie, an exact tie for second place, 24.4% each for WTI and for VIX. Ironically, both of those proved to be horrible choices for the year, both of those ending the year much lower than where they started the year. So interesting that we would see such similar levels of interest in both of those. And then bringing up the rear, what ultimately turned out to be the correct answer, at least in terms of bang for your buck, is Bitcoin. Only 7.8% of you chose Bitcoin. Obviously, in hindsight, I have to imagine that number would be higher. We did revisit that poll later on in the year. Did that number change? We'll stay tuned to find out. Shortly thereafter, on January 18th, we asked you about another hot-button topic that has been all the rage for the entirety of 2023, zero DTE. We said the zero DTE trend exploded in 2022. Is this just a fad, or is this the wave of the future? And exactly two-thirds, 66.7% of you said it's here to stay. Only one-third, 33.3%, said it's a fad. And so far, it seems like you folks were definitely right on that score. Then, coming up at the end of January, we asked you folks the zero DTE trend again. All the rage, subject of much debate at STA Chicago. Speaking of which, I will be hosting the options panel at STA Chicago coming up in a couple of weeks. I'll be joined by our buddy the Flow Master and some other great special guests, so look for that. I'll see if I can sneak a recorder into the room. It's supposed to be for attendees only, but you know I like you folks on the network, so I'll see what I can do to make it available to you folks after the event as well. So stay tuned for that. But we said at the time last year, our listeners are clearly trading these products in large numbers, but is this zero DTE explosion good for the options and volatility markets in the long run? Gave you four choices. Said yes, it's good because it gives retail cheap access to SPX, or yes, it's good because it's enticing more traders, or no, this is just gambling, or no, these are gamma bombs. And guess what won, listeners? Yes, no, they are gamma bombs, 35.3%, followed by number two, no, this is just gambling. So you're talking 29.4% there, so you're talking nearly 65% of you, almost two-thirds, coming down on the no side, saying zero DTE, no bueno for the long-term health of the markets. That is fascinating. And again, our audience, I love you folks. You guys are always skeptical, I think is the right word, skeptical of the latest trends in the world of options and volatility and derivatives, and rightly so. You folks have typically proved to be precious. That's why I say at the end of the day, you folks, the ultimate arbiters of all things options. 26.5% of you said yes, it's a good thing to give retail cheaper access to SPX, and only 8.8% says it's a good thing because it's enticing more traders. Moving on to February. February 1st, we had a quick flash poll saying, the markets back then, remember, February 2nd was the apex for many names last year, not in the Magnificent Seven. A lot of them hit their highs around February 2nd and never looked back for the rest of the year. The rest of the year was a disaster. So we asked you right around that time, February 1st, the markets are rallying hard off the Fed announcement. Does this rally have legs, or is this just a dead cat bounce? Nearly two-thirds of you, again, 65%, saying it was a dead cat bounce. 35% said rally ho, keep buying. Obviously, in hindsight, that turned out to be the right answer, even though you had some nervous moments. If you bought in on February 2nd and you rode it all the way down to, let's say, the Halloween time frame, where we saw, of course, that second leg up post the Fed announcement there. Moving on to later on in February, we asked you if you had to buy a 10% out of the money call. This time, focusing on the crypto assets. Which one would you pick? Bitcoin, ETH, Solana, or you're done with crypto? Again, our audience maybe listening to Uncle Mike a little bit, just fair to say a little bit skeptical. 33.3, again, exactly one-third of you choosing you're done with crypto, followed by 30% for Bitcoin, an excellent choice. ETH, number 2, 20%, actually number 3, 20%, also an excellent choice. 16.7%, so a distant fourth for Solana. In hindsight, that is actually the right choice. Solana having just an explosive year this year, but honestly, any of those, Bitcoin, ETH, or Solana, you didn't do wrong if you bought them earlier this year. All right, on President's Day, it was a shortened holiday week. We asked you folks, let's have some fun in this shortened week. Apple is in many of your portfolios. It's had a strong rally from its 52-week low of 124.17, but it's still got a way to go to get back to its 52-week high of 179.61. Ah, how cheap that seems now in hindsight. Which one will it hit first? Again, our audience turning to the dark side. That's why I love you folks. 77.3% of you folks saying next up was the 52-week low of 124.17. Only 22.7% of you said what ultimately turned out to be the right answer, the 52-week high, which it hit and then blew through again. 22.7% choosing that 179.61. Let's move on to the end of February. Again, another hot button issue a lot of people are wrestling with these days. Straight to the point this time. Is the 0DTE explosion in SPX increasing intraday volatility? Just yes or no. And the yeses took it 60.8%, followed by no, 39.2%. This, again, has been a question we have debated all year. We'll probably debate again into 2024. Another hot button issue around the 0DTE explosion. We asked you in the first week of March last year, saying there's been a lot of questions about 0DTE options lately. One of the most common is, will we see 0-day contracts listed in single names like Apple and Tesla this year? So now it's your turn to answer, will we, yes or no? And surprisingly, you folks turned to the optimistic side, to the light side in this poll. Not much, though, ever so slightly. 51.1% of you saying, yes, we will see single name 0DTE this year. 48.9% choosing no. Obviously, that ended up being the right answer. As you recall, when we did this poll, I was skeptical even then that we would see it this year. Just talking to all the people who manage the plumbing of the options market, folks like OCC and others, it was clear they were not overly enthusiastic about making that change anytime soon. So I did not think we would see it this year. Will we see it? Inevitably, I think we will. At the end of the day, if it makes dollars, it makes sense, and people want to trade these things. So the exchanges want it, the brokers want it. The rest of the industry will have to go along in some way, shape, or form. Just not this year, and that turned out to be the right call. That same month, getting away from 0DTE and volatility. Another popular question we ask you folks, take your pulse throughout the year. Quite simply, what's your favorite option strategy to leg into stock positions at lower prices? The ratio 1/2 put spread, the straight up short put, or other. And nearly half, 47.4% of you, I think you can guess what won. Yeah, it was the short put. Followed pretty close. I was actually impressed. The ratio 1/2 put spread getting a lot of love. 39.5% of you, and only 13.2% choosing other. We had a variety of write-ins. I won't belabor the point by going through all of those. Coming into early April, the first week of April, we asked you folks, inspired by our love of all things 80s wrestling on the option block, what are your thoughts on the recent merger, quote-unquote, between WWE and UFC, creating the new combined company TKO. Are you buying long-term calls or puts on the new combined company? 60% of you, in a strange vote of optimism, said you were buying 1 year, 10% out of the money calls, and only 40% choosing out of the money puts. Again, this was in April, so we still have some time to go on that full year. But right now, the put is clearly the winning trade. All those rumors of Vince dumping the stock were true. He crushed it all the way down from, I think it got over 100 post-merger, and he crushed it all the way down to the low 70s at last I looked. So at least for the time being, we have a few months left until the year is up. But for the time being, the long-term out-of-the-money put was the way to go there. Later on in April, we asked you folks, which option strategies are you using most frequently in your portfolio right now? A short put or covered call, long call or long put, vertical, diagonal, or time spread, or your butterfly/wing spreads. I'll give you a second to think of what you thought won. And then the answer was the short put or covered call. We put them together because, obviously, listeners, they are equivalent trades at the end of the day. 34.8% choosing that. Followed by number 2, the straightforward long call or long put, 31.9%. Then the vertical, diagonal, or time spread coming in at number 3, 20.3%. And bringing up the rear, the butterfly or wing spread with only 13%. No love for flies out there. Fast forward later on in April, we asked you folks, again, this doesn't seem like it was only this April that this launched. It seems like in many ways this was an eternity ago. But yeah, the one-day VIX launched towards the end of April. So we asked you folks quite simply, do you think this short-term measure of volatility will be useful for your trading, or is it just another meaningless number to clutter up your trading screen? And no, it's meaningless took it with nearly 75%. Kind of a depressing number for the folks at SIBO and others who are hoping to dive more into this zero-day fray. 74.4% to be precise of you choosing no, it's meaningless. Only 25.6% of you saying, yes, I trade short-term and I want to use this. So maybe not the number those folks were hoping for. Let's keep on rolling into May, the first week of May, listeners. Again, the markets were starting to look a little troubled. They were down from those lofty levels we talked about earlier in February. We said in these troubled times, where are you allocating the majority of your portfolio? Is it cash? Is it crypto? Is it equities or commodities/fixed income? And at that time, the first week of May, 45.6% of you chose cash, followed by 32.4% for equities, 19.1% for commodities/fixed income. And again, bringing up a distant fourth is crypto, only 2.9%. Again, obviously with hindsight, that was the right answer, but folks not feeling the crypto love this year. Another flash poll we did that second week of May 11th to be precise. Again, this sounds like madness in hindsight, but at the time, it was the truth. FedWatch at the time, given what they were hearing out of Powell and company, the FedWatch was showing a nearly 50% probability of a rate cut as early as July. This was the second week of May, listeners. We thought that was insane, but we put that out to you folks. You guys and gals are the ultimate arbiters at the end of the day. Do you think that will actually happen? Yes, we're going to get a rate cut in July. Or no, that's insane. Obviously, that was the right answer, and you folks went with it overwhelmingly. 92.9% saying, no way, that's insane. Only 7.1%, I was surprised it was that high, quite frankly. Only 7.1% of you saying, yes, we will see a rate cut in July. Moving on to the final week of May, we asked you, many of your favorite names are trading at or near 52-week lows in volatility. Which of these would you rather buy 1 month vol in right now, aka buying some 1 month options? Gave you 4 choices: Apple, Microsoft, the S&P 500, or Tesla. Quite frankly, I have to go back and crunch all the numbers for exactly 1 month, so pretty much the month of June. But I don't think you went wrong with any of those for the most part if you bought some premium. But Tesla took it. Not a surprise, probably. 38.8% there. Followed by number 2, 32.7% for the S&P 500. Only 18.4% for Microsoft, and a surprising 10.2% for Apple. So you folks, no love going into summer for Apple or Microsoft vol. But the S&P and Tesla, you were all over it. First week of June, we said we've seen a lot of green on the screen this year, but we've also seen aggressive bursts of selling that can turn things red in a hurry. Quite simply, will the S&P 500 close positive on the year? And you know what? Even in spite of the furious rally we saw earlier in the year, then some of the sell-offs we saw between February and this was the first week of June, even with all that in the books, about 58% of you, 57.9% said, heck yes, S&P will close positive on the year. 42.1% saying heck no. And guess what turned out to be the right answer? Yes, you folks on the right side of history yet again, listeners. Going out to early July now, listeners. We said we've seen a lot of interesting options paper lately. We can't decide which ones we like the most, or in parentheses, the least, which is, I think, the way we really were leaning. So we thought we'd put it out to you folks to decide. Again, you folks, the ultimate arbiters of all things. A gun to your head, which of these 4 trades, or actually 3 trades, would you rather buy? At the time, these were trades we had highlighted mostly on options oddities. Maybe one of them came through. I think these were all options oddities. Yes, they were. And we said the Nikola August 5 calls for 37 cents. Somebody bought those. Or the Rivian, again, these are all real trades. People did. The Rivian August 40 calls, someone bought those for 40 cents. Or the Keurig Dr. Pepper October 33 calls for 55 cents. I remember at the time when we profiled those Keurigs on Options Oddities, myself and the Rock Lobster, both like those. They were winners almost out of the gate. They ended up being fairly sizable winners, as I recall, somewhere in the neighborhood of several dollar winners. So we liked those out of the gate, but you folks loved yourselves some Rivian. The AUG 40s for 40 cents took it with 54.3%. Those ended up being no bueno. Those lost money almost instantly and never really had a chance. Followed by number 2, the actual right answer, 28.3% choosing the Keurig Dr. Pepper October 33s, and 15.2% of you only choosing the Nikola AUG 5s. Those also pretty atrocious. They died on the vine pretty quickly. Going out to July 24th, we said to you folks, there are many ways for options traders to get crypto exposure in their securities accounts. Amera, Riot, Coinbase, and BitO, all popular choices. But what is your weapon of choice for crypto options exposure? And again, you could write in with your alternate suggestions. You folks wrote in some interesting. We're not going to get into the write-ins here. That show would take 3 hours. Going to the actual votes, Amera took it with 35.2%. Makes sense. We've talked about this before on the Crypto Rundown. It is the one with the highest ADV. And if you've been watching the last couple of weeks, Amera has been popping hard and been moving quite a bit. So if you're looking for some vol, you could do worse than Amera. 35.2% choosing that for number 1. Followed by number 2, Coinbase, 29.6%. Also been moving quite a bit lately. Hard to argue with that one. Number 3, Riot, 18.5%. Bringing up the rear, surprisingly. The one that is supposed to be the one-to-one tracking vehicle. We could argue whether it does that or not, but it certainly is more highly correlated than any of these others. BitO, 16.7% only, so bringing up the rear on our poll this year. In the second week of August, we came back to revisit our poll from the start of the year. Again, if you had to buy a 10% out of the money call, expiring on December 31st on one of the following products, which would you choose? S&P 500, Bitcoin, WTI, or volatility? And the breakdown was a little bit different, but trended along the same direction as it did the first week of the year, which is interesting. 37% of you, so number 1, still choosing equities, also a decent choice, but a little bit less. I think somewhere around 6% less than it was at the beginning of the year. 29.6%, so strangely enough, more of you flocking into WTI, which again was the wrong call, even more of a wrong call in August than it was in the beginning of the year. 25.9% coming in for VIX. So more of you also choosing VIX. Again, also the wrong call. And 7.4%. So again, actually fewer of you choosing Bitcoin than at the beginning of the year. Which again, if you came in just in August and bought Bitcoin just in August, man, you had a pretty decent year, all things considered. Going out to the third week of August, we said cash was king when we asked this question back in May. Now let's see if things have changed. We again revisited the asset allocation question we asked you back in May. So May to August, so not that much time between the two, and yet interesting to see how things had changed a little bit. This time we had an exact tie, 35.7% each for cash and equities. So a little bit of a closer fight there. Followed by number 2 was fixed income. That one we actually broke out into its own category because a lot of you said, why isn't fixed income its own category? So never let it be said we don't respond to your feedback. And then 9.5%. This time we lumped commodities and crypto together. They still could only come up with 9.5% total. So no love for crypto this year. And unfortunately, that was actually probably the right choice yet again. September 4th, so coming off of the Labor Day weekend, we said, let's have a little holiday fun. It's fantasy football time again. Who are you picking first overall for your squad this year? It was a tie. 40% each between Justin Jefferson and Christian McCaffrey. 12% for Jamar Chase, 8% for Austin Eckler. If you followed fantasy football this year, you know only one of those choices actually worked out. It was Christian McCaffrey. He's been quite the disruptive influence. He took it to me in many games. As you notice, I did not have him, so that was a painful one for me. But the other three, not really bringing it, maybe aside from a few moments here or there. A little bit of a fun side poll for a holiday week. September 11th, we got back to it. Listeners said, hey, Zero DTE, clearly popular with index options traders, but what's next? Quite simply, which product or market or complex should list zero-day options next? Gave you 4 choices: single name stocks, so your Apples and your Teslas. Commodities, that could be anything, your ags, your energies, whatever you want to lump into that. Crypto, of course, pretty obvious. And the volatility complex, so your VIXs, your VXXs, all that fun. And taking the number 1 spot, once again, you folks gravitating towards zero-day Apple and Tesla, 43.2%, followed by number 2, volatility. So VIX, all that fun, taking 29.7%. Don't tell the meatball he finds that choice abhorrent. He doesn't think that will ever happen. Again, I tend to fall in the category, if it makes dollars, it makes sense. They will try to find some way to make a tradable product if you folks want it at the end of the day. Followed by only 18.9% for anything commodity. And again, only about 8%, this time 8.1% for crypto. So the crypto level has been surprisingly steady throughout the entirety of the year. We're talking all the way from January through September now. It's come in somewhere around 7 to 8%. Again, he could have bought it in September and still had a really good year. So intriguing how things worked out. Again, revisiting your sentiment from the beginning of the year. We asked you folks, we've seen a little red on the screen for this was later in September now. Time to gauge your broad market sentiment. Quite simply, where are you comfortable buying into or buying more? SPX right now, right around where it was at the time, between 4,300 and 43.5. A little bit lower, so below 4,200. Even lower, so below 4,000. Or below the 2022 low, which was 3,600, listeners. And a little bit lower, 4,200, ended up taking it 42.1%. As you all know, we did get through that, and indeed lower. We started threatening, indeed, some people thought we were going to break the 4,000 level for a while. There never ended up coming to pass. But if you were in that a little bit lower, scooping it below 4,200 level, you worked out pretty well. 42.1% of you were in that camp. Followed by number 2, by almost 25% of you, 24.6% said you're waiting for the 2022 low below 3,600. Unfortunately, we never quite got there. And then 19.3% said even lower, below 4,000. Again, never quite got there. And 14% said you were comfortable in the Uncle Mike camp. You're buying the index wherever it is. In that case, it was between 4,300 and 43.5. Going into the first week of October, we said a lot of hot IPOs and new listings hitting the market. Which one are you most excited to add to your options portfolio? Gave you 4 choices: ARM Holdings, Instacart, Reddit, or the newly minted combined entity of TKO, aka the WWE and the UFC, merged into one. 60% of you saying you want to put ARM in your options holdings, followed by a tie for number 2 between TKO and Instacart, 15% each. Reddit bringing up the rear, only 10%. Not surprising, chips have kind of dominated a lot of this year, so ARM was a very popular IPO. Coming into late October, we said we got more data under our belts now about zero DTE options, so it's time to revisit this question. Quite simply, do zero DTE options increase intraday volatility? Heck yes, heck no, or I still need more data. And you folks ended up going with 63% of you, heck yes, followed by 29.6% heck no, and 7.4% of you saying I still need more data. So nearly 2/3 of you coming down on the yes side of the zero DTE impact on volatility. Keeping the ball rolling coming into late October, the final week of October, we said we've seen a lot of upside call activity in Ford lately, including someone buying the June 2025 $9.35 calls for $2.23 and the March 10s for 72 cents, which raises the question, with Ford trading below $10, would you still buy Ford calls, or would you rather just buy the stock? And 54.2% of you said below $10, I'm just buying the stock, followed by 29.2% of you saying Ford upside calls for life. I like that one. And 16.7% of you choosing our silly third option, you prefer Tesla. Coming into the end of October, fun little Halloween flash poll. We said quite simply, what is the scariest sounding option strategy? Gave you three choices: Iron Condor, Iron Fly, Strangle, or Other. 59.1% of you chose the Strangle. Yeah, you got to go that route. Followed by 27.3% of you for the Iron Condor, 9.1% going Iron Fly, and 4.5% going Other. A few weeks later, we asked you a flash poll at second week of November. Do you still trade UBXY with UVIX in the market? This was inspired by our debate we had going on. I believe it was with Jim Carroll over there on Volatility Views. And 59.4% of you chose yes, followed by 40.6% for no. This one was kind of surprising to a lot of us, given the existence of UVIX and the fact that it is a non-neutered levered product. But hey, I get it. There's more volume in UVXY, at least for now, so you're heading where the liquidity is. Again, that's kind of a subjective question, though. Is it better to have more liquidity on a demonstrably inferior product, or to have wider markets and less liquidity on a better product? I guess that's a subjective question, and right now, you folks are choosing to go with the liquidity. I can't fault you. That's not my choice, but I can't fault you for making it. Going out to late November, we asked you folks, is it time for the Fed to revisit its 2% inflation target? Yes, it's too high, yes, it's too low, or no, it's just right. That ended up winning the Goldilocks answer with 53.3%, followed by 26.7% choosing yes, it's too high, and 20% saying yes, it's too low. All right, then to kick off the final month of the year, we asked you folks to break out your crystal ball. First up, volatility. Quite simply, where will VIX close at the end of the year? We are coming up on that answer shortly, listeners, so we will know the final answer. But we gave you folks four ranges to choose from: north of 15, 13.5 to 15, 12 to 13.5, or below 12. And the 12 to 13.5, which is where it was when we posted this poll, ended up taking it with about almost 43% of the vote, followed by 22.4% of you saying north of 15, 18.4% choosing 13.5 to 14.99, and 16.3% of you saying we're going to have a snoozer end to the year below 12. All right, that's going to do it for our look back on the 2023 audience polls. Hope you had a great time following along with us over there at Options. If you're not doing it, what are you doing? You're missing out on great audience polls like this, where you folks get to voice your opinion on just about every options topic under the sun. Also, obviously, great content throughout the day, links to our shows, all sorts of fun. You'll know what's coming up on the network, what we've just posted, all sorts of fun over there. So make sure you're following us at Options on the old Twitter, or X, as some folks like to call it these days. I hope you all had an excellent 2023. I know we did here on the network. In many ways, it was our biggest year ever on the network, and that's all thanks to you folks. So thanks again for tuning in 2023, and we're looking forward to another great year in 2024.